Today we're going to have a look at AUD USD, what's been driving it lately, but also where it's headed, using data, using CFTC positioning, and also yields. To first understand why AUD USD arrived where it is, we have a quick look at the CFTC data. It's the Scotia Bank I'm using. Over the last few weeks, AUD short positioning has been paring back. So if we have a look down here, so starting somewhere between beginning of June, 2nd June, 9th June and 16th, positions climbed down from 2.8 billion all the way to a meager 450 million. So that obviously caused AUD USD to rally as short positions continued to close out and cover their shorts. That's driving up the market. Currently it's sitting in a bit of a rangy market. Reason being, its position is mostly neutral, and it's not a lopsided market at the moment. The month-end rebalancing is coming up soon, and usually what that means is for portfolio managers they will need to rebalance their books. Most portfolio managers or money managers have assets under control globally, and they have a ratio on how they run these assets. That means sometimes there might be ratio 1 to 3 or 3 to 5, and sometimes it could be split in the middle, which means, for instance, 50% of the assets will be invested in US stocks and maybe 50% of them will be invested into Australian stocks. And every month when one stock performs better than the other stock market, that will distort that balance, which means money managers will need to sell one asset that performed better and invest it into the other in order to balance their books, and that's basically called month-end rebalancing. Very roughly speaking, that means if one stock market is better than the other, you could expect the other currency to pick up during the month-end rebalancing. I've done a quick check. It looks like the Australian index been performing a little bit better than the indices in the United States in June, which possibly points us towards that the month-end rebalancing favors AUD USD short. But that's not everything we're looking at. The other thing I'll be looking at as well is the economic surprise index. So USD is sitting way higher than AUD, and that's a huge divergence that doesn't look like it's been represented on the charts at all. So if you look at the charts here, it looks like AUD has been faring way better than USD. And the reason mainly being is the shorts been covering. So it looks like we have a divergence here, and that change has been happening for nearly over a 20-day period, where US data has been slowly progressing to start performing better than the Australian side. And if I look back about 20 days from this candle on, that's most of the part here where US has been performing somewhat better than the Australian dollar, but price hasn't been really reflecting that at all at this point. The other thing I look at is the Australian 3-year yield. It's currently very interesting to follow that because the Reserve Bank of Australia has made it a mandate to control the curve of the Australian 3-year yield, which means basically every time it moves too far away from the 0.25 level that I've drawn out here in orange, it will start buying Australian bonds to drop those yields lower, which means they will be spending money, and usually that translates into crushing AUD lower. So if I overlay AUD USD, you get a better understanding what I mean. If I zoom out a little bit, you can see here every time the Australian 3-year yield reached a little bit too high, Australian dollar came down. So I'm going to point these out to get a better understanding what I'm talking about. And over here again as well, so 20th of May, hammered AUD lower, and it did around this period as well. And with Australian 3-year yields sitting too high in the range again, we can expect that the RBA will start getting active to get the yields down, which tends to pressure AUD as well. Now keep in mind, over these past few months there was a lot of AUD shorts they had to cover, so we had this trend up here. Currently AUD is somewhat neutral. There isn't a lot left to cover, which could mean, coupled with a month-end rebalancing, we should see a couple more legs lower in AUD USD. So I'll be looking at the FX calendar just to see what we have throwing out the next couple of days and weeks. Tomorrow and the next day is bank holiday in China, in observation of the Dragon Day, I believe. And usually that's not really positive for risk. You tend to see that risk falls off, positions getting squared, so that could pressure the currency a little bit. But something a bit more interesting that we will have in the following week on Tuesday and Wednesday is Chinese manufacturing data, and more importantly is the US ISM manufacturing. Seems like the manufacturing PMI in the United States is picking up. If they will show a strong showing, the gap in the economic surprise index could be stronger in favor of USD, which means the United States economy is doing better than the Australian, which should translate in a lower AUD USD as well. Keep in mind, the following week will be a shortened week because we'll be running into the Independence Day, which means Friday you won't get the NFP. You will get the NFP on that Thursday. And going into the next month, being such a short week, the possibility of new risk taking from asset managers globally tends to be a little bit lower, which would mean that position squaring should continue. No new risk likely to be taken. That's a negative for AUD, carrying the whole thing over all the way into the RBA meeting on the 7th of July. So between now and until the 7th of July, I'll be looking for AUD USD to find a leg lower based on these data we have right now. A range we've established right now is around under 70 level, 70 cents. This should be opening up towards 66 cents, 66.50 thereabouts. In the short term, I'll be looking to engage into shorts until we reach that level, or until we're closer to the 7th of July to the RBA meeting. Hope you enjoyed that video. I do a lot of these videos where I explain why things move and the way you can put things in our favor a bit more logically, just so the moves in the market make more sense. Some of these moves tend to carry prices for month end, and it's very rewarding if you keep adding to your position and see your account grow. It's very fundamental and macro based trading, but it comes all together as a puzzle. So I hope you enjoyed that video. Looking to do more of these in the future as well.